I started in 1996 in the retail brokerage business as a retail stockbroker and a retail commodity broker. A number of years later, I started a company called American Online Trading. I thought I was going to partner with America Online, and we were going to be the biggest online brokerage firm in the world. Well, that didn't quite work out. Because not that AOL wasn't keen on the idea, they were, but the regulators were not on AOL being a conveyor of a tremendous amount of news and being in the brokerage business as well, although surprisingly today that happens quite a bit. As a retail brokerage business, I owned American Futures and Options, AFO, and from that came a fund management company where we were commodity pool operators and commodity trading advisors, and we managed money for high net worth individuals, and they were all what are called Regulation D products, which required individuals, either accredited investors or what is called qualified investors. And so for us to really be able to advertise, and we decided to only solicit the business outside the U.S., which worked really well, because a lot of the people that are outside the U.S., if they invest in their local markets, they don't have the rules and regulations and that kind of thing that America has. And because that was pretty appealing to people outside the United States. And also I made sure that we had all of our accounting outside of our office. Every month, all of the statements from all the prime brokers would go to independent accounting firms away from the office. Before we ever got it, the accountants got it, and then each year our product was audited as well by an independent accounting firm in Denver. Now the monthly accounting, that didn't have to be done by an outside accountant, but we wanted to make sure that our clients felt confident that we were doing everything we could to make sure that they would feel confident that their money was where it was supposed to be, and there wouldn't be any mistakes or anything like that. And we wanted to stay ahead of the regulators too, in terms of figuring everything properly, where we didn't have to go through and make adjustments later on. If you've read my newsletters lately, you know how much I dislike having and change the numbers when the USDA does it, or some of the government aid. It just is such an irritation. And so with ADF, I did that, and we stopped about 2005, mid-2005, and it was great fun. We got to meet some interesting people. We had offices here in the U.S., and also we had offices in Cape Town and in Johannesburg. And we looked to expand even further, but then once the Patriot Act came along, that really kind of put a damper on things. A lot of international investors were a little suspect of what our government might be thinking of with that. And so in addition to the American Futures and Options, the American Diversified Funds, and American Online Trading, I also own freecharts.com, which started out in 1998, I believe, as a concept of providing free quotes and charts for our clients as well as for the public, and to draw people to us. At that time, I don't really believe there were any websites out there that provided and chart for clients. Wanted quotes and charts for anything, you had to pay for them. And shortly after launching freecharts.com, I believe it was in early '99, Yahoo started using our website and referring traffic to our website from their Yahoo Finance area. So we had a tremendous amount of traffic, and now there have been a number of other websites that have kind of sprouted off to kind of take advantage of that kind of thing. But now, of course, now Yahoo Finance has a tremendous website and that type of thing. The goals for our new website, the myoptionsnet.com, is to provide you as an investor the tools, the skills, and the confidence that you need to be an effective to effectively manage your accounts, to understand how options work, and to also get a broader understanding of how the markets at large work. And I believe that the more you understand options trading and the volatility and the Greeks and that kind of thing, the more you understand the principles of options trading, the better it's going to make you in every area of your trading. With the trading, in trade preparation, which is one of the first skills that we'll be working with. In fact, Saturday we have our first actual webinar workshop, and these are some of the things that we're going to be working on. We're going to be working on trade preparation because most everything is in the preparation. The formula for success that I've heard over the years, and I believe there's a lot of accuracy to it, is preparation plus opportunity equals success. Well, we want to be prepared, and if the market provides it, we want to be able to step through there confidently and take advantage of that and do what we can to make them. So the first thing we have to do is we have to look at the big market. We have to get what is the big market doing? So we have to picture this and see what's happening within the big market. Because if we look at an individual issue, an individual stock inside the big market, and the big market and the individual stock is going down, well, there might be a reason for that. Maybe that individual company is not being run properly. It's unlikely that one stock is ahead of the rest of the market that much. So I would like to see where the big picture, get an idea what the big picture is of the big markets, and then and use something like the S&P as a good benchmark. As far as the Dow is concerned, I'd forget the Dow. First of all, the Dow is it's very narrow index, and it just doesn't have the volume or the impact that the S&P has, or even the NASDAQ and things of that nature. But I prefer to generally, in terms of the index and indice, I would prefer to look at one of the Russells or the S&P 500. The S&P 500, I think, is just the way to go. Now, when we're looking at both the big market and the individual stock that we're thinking about, we're able to identify the trend. If we're looking at charts and that type of thing, and we can tell whether the trend is up or the trend is down or the trend is sideways. And it's important for us to know that, because that will help us understand and decide on what strategy we're going to be using. And the way that we can identify these trends is through technical indicators. Now, I use stochastics, RSI, which is the relative strength index, and what that tells us is if the market is overbought or oversold. If a market is under their rating of 30, then it's oversold. That means that it's oversold, and when it's oversold, you can start seeing if the indicators and if the charts start to look like it's going to be turning around, stochastics and that turns around, and the moving averages, well, then the RSI might be a little bit of an advanced indicator. And the next thing I look at is the ADX. Now, ADX is not an indicator, a directional indicator. This is a indication of trend strength. So anything over 15, 16, 17, that type of thing, and the trend is getting stronger. If you're seeing it, and as you're tracking it day by day, if you're seeing the ADX get weaker, well, then that might be an indicator that trend might be weakening, whether it's going up or down or whatever it is. So I like looking at the ADX, and then I use the moving averages. The moving averages, I like the 3-day, the 9-day, and the 18-day moving average. And I like these. These are pretty well standard, and most indicators work with them pretty closely, or they might work for a 14-day or something like that. But generally, 3, 9, and 18-day is a pretty good baseline for working with your moving averages. Now, the 9-day, in many cases, will actually indicate your support or your resistance. So having a 9-day is really, really important. In fact, in most cases, or I shouldn't say most cases, but in a lot of cases, the market really is trading between your 3 and your 9-day, your 3 and your 9-day moving average. So I think it's a good idea to learn to use those moving averages. And if you don't have a source for charts, you can go right back to free charts, which is where you guys go every day anyways, and you can go to free charts. You can pull up the stock. If you go to the front page and click on that box that says stock, and for stock quotes or stock chart, and you put in your symbol on the left-hand side, there'll be a little empty box, and it says enter your symbol there. You put your symbol in there and click on go, and then it takes you to a area where there's a number of different columns of numbers, and you'll see what they represent. I mean, it's not rocket science. It'll tell you, be pretty much self-explanatory. And then on the left-hand side, you'll see an area, a little gray box. Well, there's a number of boxes on the left-hand side, and if you click on chart, that'll pull up a chart, and then you can see now it'll generally show up as a daily bar chart. Now, if you want to use candlesticks, you can use candlesticks. And I'll tell you how you can change that around. But if you're using bars, it's generally going to be a daily bar chart, and that'll show you the open, high, low, close on a daily basis. And you can run your cursor over, and it will up towards the top of the chart. It'll change what those values are on that your cursor is pointing to. Now, if you want to change things a little bit, which you'll need to if you're going to use stochastics, RSI, and the ADX, and your moving averages, you're going to need to on the lower right-hand corner of that chart, you're going to need to click on that where it says Custom Chart. And in the lower part of that box that pops up there, it'll ask you, it'll talk about parameters. Well, you can change the parameters. In other words, you can change the indicators, the overlays that you want to use, and in those 3 little boxes to the right of there, you can put in your time frames, whether it's 3 days, 4 days, 5 days, and that kind of thing. And there's 3 opportunities for you to have. Like if you're using moving averages, you wanted to use 4, 10, and 20 rather than 3, 9, and 18. You could do that, or you could make it shorter, or that whatever you want to do. So, anyways, that's a quick lesson for free charts as well. So, anyways. If you follow the technical indicators, you'll be able to determine what the trend is, whether it's up, down, or sideways. And I might also add that it's said that most markets trade sideways in a sawtooth sort of a pattern in a channel about 70% of the time. And so it's important to understand what the trend is. Just because the market is going up a little bit or down a little bit, is it really in a trend, or is it just rattling around in this channel? And so it'll be a good idea for you to understand that. And we're going to be going over identifying channels and that kind of thing in future workshops and webinars and that type of thing. And we're going to have some people on board with us next week on some of our webinars in the next week and next 2 weeks, 3 weeks. If you're really interested in making money, these guys can absolutely, they'll knock your socks off. They are awesome. So, first of all, we got to define options. You've probably been through this before. If you've read the newsletters, you probably are familiar with this. But in case there is someone, we don't want to leave anybody behind. There's 2 different types of options that we're going to be dealing with: call options, put options. Call options give you, the buyer, if you're the buyer of an option, the right but not the obligation to go long for a particular strike price. A strike price is simply a price point of in the market. And then there's put options. Put options give you the right but not the obligation to go short from a particular price point or strike price in the market. The great thing about this type of trading is you can buy and sell what you do not own. You do it inside of a margin account. If you don't have one already, there are a number of different brokerage firms and many of these are completely independent of us. Remuneration from these people, they're just people that we know of and believe that they're good quality brokers, and they know enough about options trading. They've taken the time to educate themselves because they care about being a professional and being able to provide you as a client with good, solid answers. The brokerage, you need to make sure that you're with a brokerage that allows you to both buy and sell options and spreads. And we're going to be going over a variety of strategies in the coming weeks that will teach you how to use a variety of spreads, whether it's straddles, strangles, bear call spreads, bear put spreads, bull call spreads, bull put spreads, condors, iron butterflies, diagonal trades, which from what I'm told right now are not working so good. Weekly options, the weekly trading, boy, I'll tell you, that is a hot really a hot concept right now. They've been around for a long time, but it seems like in the last year and a half, these things have really gained a lot of attention. This is almost as hot as what day trading was a number of years ago, and there's money to be made in this, and you can limit your risk to your downside risk, and the options expire very quickly, and they lose time value extremely quickly because they're made available on Thursday. 8 days later, they expire. So these have a very short, like the Firefly. They've got very little lifespan. So anyways, we'll be working on those as well. And if you're thinking about doing that, you'll definitely want to pay attention to the 3 and the 9 and the 18-day moving average, specifically the 3 and the 9-day, because you're only going to be going 8 days out with that at the most. Most time you're going to be going maybe 3 or 4 days out. You're really not going to be putting these things on until maybe late Monday or maybe, and then Tuesday, Wednesday, Thursday, and then they settle on Friday. It closes out on the Thursday evening, and then they settle on Friday. So you really only took it at being in the market. So you don't need an 18-day moving average on that type of trading and that type of thing. But anyways, with myoptionsnet.com, these are some of the things that we're going to be covering and that we're going to be working on, and we're going to use live trading, whether it's yours or ours. We're going to be, we're going to go over trades that you're doing and the trades that we're doing, and we're going to be able to show you exactly why we're involved and how to keep good records and how to build, so you can build the confidence. And so getting back to the brokerage firm that you ultimately choose, you want to make sure you're working with an outfit, again, that will allow you to buy and sell options and spreads. Okay, and the other thing is you want to make sure that that platform that they're providing you has a simulated trading platform attached to it. And this is really critical that you do this, because for a few weeks, maybe in a month or two, you're going to want to do some simulated trading, because 1 or 2 days of trading, or even a week of trading, does not mean that you've got it. You want to trade in environments so you know how to react and what to look for, whether the market's going up, whether the market's going down, or whether the market's over the last 18 months, and this what I believe is a manipulated market. This is for me it was very difficult, because I just look at everything from a technical perspective, and that's why if you look at many of the money managers that were trend followers, and all they did was technical analysis. Many of them had very years, as I did this last year, because I was looking at things from too long so we've had to read up the stroke on these trades and look for things, because people and manipulating the markets by injecting money and that type of thing, and it just is you just can't see what's going on for the next 30 or 45 days or 90 days, and that type of thing. It's much more difficult than it used to be. These indicators, they're pretty good. If you understood the indicators and would actually put the time in to study them and watch them pretty closely and track them month by month, you could do pretty good. But that's not necessarily the case these days. In terms of being, so what we're looking at is particular markets where are down and strategies that are risk is defined. If we do get caught in a situation where the market way against us. We don't want to take big hits. We want to, we'll eat this elephant one bite at a time, but we don't want to let the elephant get away. We want to keep eating it every 2 weeks, every month, and so on. This is a list. This is a screenshot program I use, and I've recommended it to a lot of people in the past. It's a program called Option. If you can just try of it in a week, see what you think. I like it. I've compared it to a number of programs, and I think it's an awesome program. And in fact, James Hogan, who was on our afternoon webinar today, he works with Option View. He's speaking to our members in one of our webinars in the coming weeks. In fact, there's a number of the fellows from Option View that are going to bring along some unique insight that we're really excited about. So here's the and this is an this obviously example, and you can see up in the top bar here how it has things. Here you tricks whoop, let me put my glasses on here. The price chart, the volatility chart, the trading log, and it depends on who your broker is. But build trees, and then if your broker, the brokerage firm that you're with, has agreements with Option View, you can hit trade, and that trade will be sent to the brokerage firm. And if that's something that's of interest to you, James can answer those questions as well. And so we'll get that. But I'm not really sure that we're really there yet and ready to go. But long before you're ready to go and actually put real live money to work, you're gonna be hearing from James, and you can ask those questions. The next thing, we're using Apple as an example here. This is what's called an options chain. Okay, right here you're going to see that these are all the calls. This was from a few days ago when I did this example, and Apple was at 544. And these are examples. These are the calls up here, and these are the puts down here. And you can see that what I do is I did a little ratio spread here, and what I do is I sold the 10 of the 545 calls, and I bought 20 of the 560 calls. Now, the selling of the 10 calls almost paid for the 20 calls, so my risk is limited on those 10, and then I've got 10 more calls that are going to be free and clear, but it does cost me a little bit. I mean, when we look down here, the total deal, my total initial, it's that kind of $16,295. Now, if the actual cost of the spread, because the 10 545 calls were slightly greater in value than the 20 560 calls, so there's a bit of a debit here, and it's a $1,295 debit. But although that might seem like a lot of money, and this is a pretty good size ratio spread. There's a 1 to 2, but it's 10 to 20 really. Anyways, it seems like a lot of money at $1,295. But you're going to see in a coming up slide what kind of leverage this actually provides. Now this particular illustration is a graphic trade illustration of our break-even, and this is again, this is another screenshot from Option View, and you can see here that of course we're losing money in here, but as the market goes up, this market gets over 574, 575, 576 in here, and it breaks it. This is our break-even part. Once this market breaks even, there is tremendous. Actually, there's unlimited profit potential in here. You can see that with this little spread that costs us $1,295, if up to $600, $610, something like that, we'd make between 30 and 35 grand. So there's tremendous leverage in this. You can also see that you can use a step-through program that will, based on volatility and time, it will show you what the real break-even is based on those parameters. So you're able to adjust your parameters and that kind of thing, and that's very, very useful as you're analyzing the trades. So you can see, where will you break even if there's a little movement in there. And when you study the Greeks, that'll be really important, because the Greeks will help you understand and forecast what the profitability or your risk might be based on the change of statistical or implied volatility and how it will affect the underlying asset. Now, I know that some of this stuff might seem, well, I don't want to say Greek to you, but it might seem a little foreign to you at the moment. But believe me, after a few weeks of this stuff, you're gonna be spewing this stuff in your sleep. You'll know it backwards and forwards. Options trading is not terribly complicated. It's a vast subject, but it's not terribly complicated if we just take it a little bit at a time. And we're doing this at almost no cost. I mean, I know there's a lot of courses out there that a person can take, $1,000, $2,000, $5,000. You can go to a John Nigerian webinar or seminar for 2 days for $5 or $6 grand, or whatever it is. I mean, it's enormous. I mean, the guy is brilliant, but boy, oh boy, you're really paying for that knowledge, which I'm not sure that we really need to pay that kind of money. What they're doing amounts of money, we're going to be doing for about $1.50 a day. The option is an option. We're going to be learning the same things, the same strategies, same way to apply them, when to apply them, and that type of thing. And if there's something that I'm not certain about, we're going to find an expert and get him to come and talk to us. So we're going to be sharing the microphone a lot and getting some great people that have some insight in very, very specific areas. So when would you take this sort of a trade? When would this trade make sense? And so these are all the things that we're going to have to think about. What type of trend is best for that type of trade? An up, for that ratio spread, an uptrend or a downtrend or sideways trend. And I don't know if you remember, but if you saw it on that on the screen, of course I'll go back to it. How many days till expiration? Well, when we were looking at this right here, we see that there are 5 days to expiration. Now, of course, if you're not familiar with option view, that may not have made a lot of sense to you. But anyways, 5 days to option expiration, and it lists the date as February 22nd. That's the day that those options expire, February 22nd. Now, we did ours in the March contract, in the March options, which at that time had 33 days till expiration. They also expired on March 22nd. Well, not also, but they expired on March 22nd rather than February 22nd, and they had 33 days till expiration at that particular point. Okay, and what are statistical volatility and implied volatility? Well, statistical volatility is the actual volatility of the underlying asset. In this particular case, Apple. Okay, if Apple's volatility, if the actual stock is not moving very much, the statistical volatility is going to shrink. Implied volatility is the perceived volatility, the perceived risk of the market moving to a particular price point. And so stability is the actual volatility. Implied volatility can be thought of as the perceived volatility. Now, which of those are most important to you? Well, actually, both of them are really important to you. But what affects the price of the options the most is the implied volatility. And that's how we're going to know whether an option is overvalued or undervalued. If the statistical volatility is in a normal trading range and the implied volatility is significantly higher than the statistical volatility, then that option is probably overvalued. Now, if the implied volatility is significantly less than the statistical volatility, then you generally have an option that is undervalued. And you know the old saying of buy low, sell high. We don't want to be doing the opposite. So we don't want to be buying the really, really expensive options and then selling them after the implied volatility evaporates. So anyways, going back to our spread here that we had on this previous trade. Now, is that a what's called a debit spread or a credit spread? Are you familiar with those terms? Well, a debit spread is a spread where we have to pay to enter those. It's a debit spread. We have to put up money. We have to pay money. Plus, we have to have the money for the margin. So we have to pay to put on this particular spread. And so this is what's called a debit spread. A credit spread would have been if we had done the opposite. Now we may have collected a little bit on the front end. However, if this market moved just a little bit, we could have an enormous loser on our hands. So we want to make sure that we're doing all of our homework and all of our study before we ever really consider what type of trade we're going to be doing. And these are all things that we're going to be doing on a regular basis, whether it's the trades that we come up with or it's the trades and the ideas that you come up with. We're going to be going over these things all the time, and we're going to share these things with all the members. So we're going to make sure that everyone has a good, clear understanding of what we're doing. And ultimately, we're going to have a forum where you're going to be able to communicate with the other members and share your ideas and have them share their ideas with you and some of the things that have worked for them and some of the pitfalls that they're going to warn us about to avoid. Now, compare this move, this trade. Compare this to buying the stock retail. Okay, because we're going to have 20 options on that we bought, and each option is 100 shares. That means that the 10 of those options are going to cover the 10 options that we sold at 545. The 10 of the 560 options are going to cover that. So that's going to take care. And then we're going to have another 10 options that are going to be free and clear. That if that market goes up like crazy, we have the opportunity to make a ton of money. Now that 10 options, those 10 calls at 560, that represents 1,000 shares. You see right here, the 10 calls at 100 shares apiece is 1,000 shares. And if the price is at $545, well, it was at $544 on that particular day, but $545 per share, that's $545,000 of Apple stock we're controlling for 33 days for $1,295. That's massive. That is massive leverage. And your downside risk is limited. And you've got unlimited profit potential. That's the beauty of some of these strategies that we're going to be working on together. And you're not going to be alone. Once you put these strategies on, and once you get these things worked out as to what you want to do, you're not going to be alone. You're going to be with you're going to be experts who've been doing this for years and years and years. And very, very long time. I inherited my version of back in 1996 when my father passed away, and I just got into business, and that's when I started to become familiar with option view and with options trading. And then I had a client in Maryland who did real estate work, and he was a wizard with option view and with options trading, and he trained me a lot. He taught me tons of things about option trading. He should have actually been an option trader. I mean, just should have stuck with trading. He was a brilliant guy, and so you're going to have experts with you every step of the way. If you have questions, you'll always be able to get a hold of us. Ours, of course. So I'm not always available at midnight, although last night Bill called me last midnight, and we talked about 2 hours about stuff, but I'm not generally going to be awake and available to take phone calls at 2 o'clock in the morning, or at midnight or going to 2 o'clock in the morning. Even my dog was ready to go to sleep and was not scratching the door like, hey, come on, Pops, let's get to bed. So anyways, you let me know you need help, and you're going to get the help that you need. And we're going to give you the very best answers and that kind of thing that we can provide you. And if you do happen to stump me, I don't know that you will anytime soon, but if you do happen to stump me, we're going to get a hold of some people that can answer any questions or we're going to go look through our video library. We got a tremendous video library and a library of articles and books and that kind of thing written by experts, guys like Dan Sheridan and James Hogan, Jim Graham, Ken Dole, Steve Lentz, we're going to be, we're going to be, looking in there for answers as well. These guys are brilliant guys, and many of them have been doing this for 25, 30, 40 years. And so you have literally hundreds of years of experience at your fingertips. And so we're really excited about the relationships we're going to have with some of these folks. And it's going to be, the old saying, education is expensive, try ignorance. Well, these guys have taken the time to educate themselves, and in some cases, they've educated each other. Dan Sheridan has done a lot to educate some of the people, some of the best-known options traders in America today, and some of the guys actually have TV shows. So, anyways, we're really excited about the people that we're going to have on board with us and the people that we're trying to get to come on board with us. So when we think about it, how did we get, how do we really connect over the years? I mean, how did you come to free charts and that kind of thing, and how did we end up in that? Well, many of us have been together for years and years. You guys have been subscribing to my newsletters and to free charts and that kind of thing. You've been coming by and getting charts and quotes and maybe some news reports and this and that, and checking on ETFs or Forex and different products as they've come along, and then again maybe reading the newsletters and things like that. So because you've been a subscriber of the newsletter, that's why you got this first invitation, and that's why because of your loyalty, because you've been with me for years and years, you guys already know me, and I feel like I kind of know you, my audience as well. And so that's why we wanted to throw this offer out there for you guys and give you a little bit of a head start and an early bird special, and knock off all the extra stuff and just get down to the bare bones and that kind of thing. And so we can help you learn because you guys have had some great questions over the years, and you had some great participation and that kind of thing, and we really do appreciate it. So, at some point or another, you signed up. It might have been 5 years ago, 10 years ago, 2 weeks ago, whatever it was. You signed up looking for information, and if the information that we provided you over the years wasn't sound, would you still be with us? Well, of course not. You'd have dumped us a long time ago. So that we put out good quality, solid information, and you're gonna continue to receive top information with myoptionsnet.com. And if you're not a member of MyOptionsNet already, I don't know why not. We've sent you a bunch of invitations. Told you, this is, after Saturday. Once we kick this thing off, we got to start opening this thing up to the public. So because we have arrangements with other people, we have arrangements with different firms and that kind of thing. We're going to be working together to bring you better information in very timely information, and to work with you and train you and to provide you discounts and access to better tools and better ways of doing things. And not just on options trading, but the better you are at options trading and the better you are at analyzing options, the better you are in all areas of your trading. So this is going to be a tremendous benefit for you and for me as well, because every time I train or teach something like that, I learn a ton, because I have to make sure that I'm well prepared to answer any questions you have and to provide you good, solid, and sound information. So what we want to do is we want to make leverage work for you. So we want to learn to limit your risk. And how are we going to convey that information? Through free webinars, free market updates, free video library, which I was mentioning to you earlier. We put together a tremendous free video library and an article library. And some of these videos are going to be our videos, and some of the articles are our articles. Say that 10 times. And so you're going to get some information directly from us and from people that we've learned from and that we've worked with for years and years. So what else are you going to get? You're going to get mentored by some of the absolute top experts. You're going to get a weekly newsletter. You're going to get trade alerts. Al, I believe he's with us tonight. I don't think he was with us this afternoon. I think he was with us today, or I'm sorry, tonight. He had emailed me and said, well, it sounds interesting, but I want to know that there's going to be trade alerts. And when the trade alerts, are those going to be real trade alerts, or are they just going to be like, well, no, when we're going to put together real trade alerts, for our early members. Now down the road, there's going to be an add-on, there's going to be an upsell for people. But right now, the people that are going to be with us, these people are going to be grandfathered in, and they're going to get the trade alerts, and they're going to get a lot of the benefits, a lot of things that people down the line may not be able to get. They'll be able to get them, I should say, but they won't be able to get them for your price. So, and we're going to provide you, with the introduction to tools and tricks to make your trading rather easier and more profitable. And not just your options trading. I don't care if you're trading stocks, mutual funds, ETFs, Forex, or whatever. This kind of stuff, this good technical analysis, sound technical analysis, and ways of trading carry over into all kinds of different markets. So it's going to make you better all the way around. So what's left to do? Get your credit card out. Sign up. After you sign up right now. You check your email for confirmation. Sandy will send you a confirmation email, and it'll show you all the details to attend Saturday's webinar. And Saturday's webinar is going to be meat and potatoes. It is going to teach us a ton, and you're going to see your trading results explode. So sign up now. And we waive the initial registration fee for everybody from Free Charts. And the initial registration fee is $197, and then it's only $47 a month. That's about $1.50 a day. And we're gonna share with you 20, 30, 40 years, 50 years in some cases of trading experience. And these guys have the battle scars, and I've got the battle scars to show that we've been in the trenches for a long, long time. So let's make 2014 and beyond spectacular together. Now, when you sign up, you're going to receive an invitation to Saturday's workshop, and keep those details. Now, we're going to be sending you some reminders along the way, but keep the details for Saturday's workshop, because we want to be sure to see you there on Saturday, and that's going to be at 1 o'clock Eastern time, and you'll get all the details in your email box. So go ahead. Now, down here at the bottom, this is the link to go sign up. I just this go to webinar thing is a little bit new to me, and the people who are on today's webinar could probably tell, because the computer I was using just would not cooperate, and it was almost comical if it weren't so sad. But anyways, some of you have come back and you've signed up. There's I think 6 or 7 or 8 of you that came from this afternoon's webinar, and now you're with us this evening. So you can see the difference between when the computer is cooperating with us and when the computer is not cooperating with us. And tonight, the computer is working perfectly. And so we're able to give you all the details, and I'm actually able to see the screen and give you all the information I wanted to give you. So go to this link right now. That's http://www.myoptionsnet.com/p=168. Go there and sign up for to become a member of myoptionsnet.com, and then you'll get a turn right around information email, and that'll give you all the goodies for how to get in there Saturday. And remember, we're live webinars just like you're having tonight, but it'll be more in detail about the actual nuts and potatoes of trading, and we're our own examples to communicate with us interactively, and if you've got a trade or if you've got some things you're looking at, let's go and let's beat those trades up a little bit, see what we can do, make you some money. And obviously, this is a big boys business, and we can't guarantee success. There's risk in anything that you do, and this is no different. Every day that we wake up, and people aren't throwing dirt in our face. There's not grass about 6 feet above us. We're in pretty good shape. But nonetheless, there's risk involved, and this is no different. Anything you're going to do that's speculative, now we want to limit that risk, and we want to optimize and provide the greatest with limiting our risk. And so when you think about that, what the heck is $47 a month? Almost nothing. So let's get started. Let's move on and get this thing going and get you trained up in maybe we'll have some trading contests the second half of the year. Maybe we'll spend the first half of the year this year getting ourselves prepared and getting everything ready, and maybe by April, March, April, May, maybe by April, May-ish, something like, we're able actually to get you in the markets with real money and get you practiced up for a month or two, and then have a contest. I don't know. It just kind of came to me, but who knows? Maybe we can do something like that. So, excuse me. Let me see if I get this mouse working here. Okay, let's see. Now, let's see here. Let me go to this screen right here and see. Does anyone have any questions so far? Any questions that you have that I can answer for you today before we get to Saturday's session? Okay. Let's see. I can't read that very well. I don't know what. Well, I'm still not really a wizard with this GoToWebinar control panel thing. So, anyways, well, we're going to have any kind of answers or questions that you have on Saturday. We're going to go through all that stuff with you. So don't worry about that. We're going to go through all of it with you and answer any questions you have. And may have set this thing up where you can actually call in. And I'm not sure if it might. Where you can call in. Everyone else will be able to hear what your question is and what your commentary is as well. So we'll see. But we are going to have some guest hosts coming up in the next couple weeks. And next week, all of our members will have a schedule of when these talking, who they are, and a little bio of what their expertise is and who they are, what they've been in the business, and that type of thing. And everyone is going to be a seasoned expert. And people that have traded and people that are trading and people that have trained other people for years and years and years. And in the options business, these guys, their names are household names. So these aren't some guys that 6 months ago or a year ago they figured out how to spell options. And now they've got a system and they're going to sell it to you. Like there's a bunch of those guys out there right now. But anyways, these guys are actual real professionals and have been around this business for a long, long time. So you'll be very, very happy when you see these guys and you hear them speak. So, okay, well, that's pretty much all I have for you tonight. And like I say, when you sign up this evening, get that credit card out, go to that link there, myoptionsnet.com /? small p equals 168, and sign up now. And, do it now so you save the initial sign up fee of $197. Because that's only going to be available. We just made that available to our free charts people, and really, because we use this a little bit as, I use this as kind of a trial run, so I could kind of figure out how to do some of this stuff. But it's your benefit, because of my inexperience with this GoToWebinar thing. You save $197. Can you beat that? So you showed up, you listened to this, and so we made it through it, but much better than we did this afternoon when our computer kind of fried on us. But anyways, go to that, and then as soon as you get signed up, Sandy's going to send you out an email that's going to tell you how to get to the webinar on Saturday. And again, it's 1 o'clock Eastern time in the afternoon, and it'll be about an hour and a half to maybe 2 hours. Depends on the Q&A. But we're going to schedule it, or anticipate it being about an hour to an hour and 15 minutes, and maybe 15 to 30 minutes of question and answer. So anyways, come join us, be with us, and for $1.50 a day, you can't really go wrong. So thanks a lot, and I appreciate you. Even if you don't sign up, I still appreciate you being a part of Free Charts, and I look forward to work with you on both sides. So thanks a lot, guys. I really appreciate it.